Are you sick of the IRS stealing your hard-earned money from your business? Well, I'm going to show you how to commit tax fraud. In a fictional world, at least. Anyway, let's take a look at this unassuming building. There lies several Fortune 500 shell companies that have a valuation higher than Europe's combined GDP. Welcome to the island countries of Cayman Islands, Bermuda, and British Virgin Islands. But not to be confused with the American Virgin Islands because, well, Uncle Sam and the big evil IRS loom out over there. These perfect and nice tropical islands are filled with sandy beaches with a population smaller than your local Walmart. So why companies like TikTok, Marriott, Tencent, Baidu, and thousands of family offices are registered in the middle of nowhere? Just the British Virgin Islands alone. The place has a population of around 30,000 people and over 400,000 companies registered. That's, let me think, 13 companies per person. So if you don't own 10 companies in the BVI, you're just slacking, man. You see, these islands specialize in a very nice creation called zero corporate income tax. You can make $1 billion in profits, and no tax has to be paid to the government. There's also zero capital gains tax, zero inheritance tax, zero gift tax, TV tax, sugar tax, alcohol tax. Well, you get the point. They ain't got no tax. Here's how it works. You hire some guy named Bob in a P.O. box. You wire him a couple $1,000s, and within 48 hours, you just launched your own offshore company, Blue Candy Cayman Islands Ltd. Start with transferring the rights of your blue meth to the new company. Now, when you make a sale, technically the profits of the sale would belong to your offshore company. But since no income tax is charged, all that hard-earned cash goes straight to your bank. Nobody, including the almighty IRS, can get their filthy hands on it. Now, you just need to figure out a way to move your offshore money back to your main account. But that's a topic for another video. Now, you might be asking the real question. What's it like to live there? It's actually not bad. The islands are gorgeous. There's sailing, scuba diving, and a strangely high concentration of lawyers per square mile. The government funds itself primarily through financial services and tourism. You only have to be careful of some of those nosy bastards like investigative journalists working on those nasty Panama Papers. Yuck. But let's be honest, it's still a tax evasion tropical paradise. I mean, look at this, and this, and this. S tier for all three countries. Next, we have Europe. Now, let's start with the Red Cross. Look, we all know the Swiss are good at three things. They have lots of mountains, being neutral, and they love laundering Nazi money. Switzerland used to be the gold standard for financial secrecy. Swiss banking laws guaranteed full client secrecy, to the point where even the Swiss government couldn't peek. You could walk into a bank, deposit this big old bag of cash, assign your funds to some anonymous numbered account, and your money becomes invisible to the outside world. Drug lords, dictators, former Austrian artists? Yeah, the Swiss got you covered. Even the biggest bank, UBS, had been sued in order to pay $511 million for helping US taxpayers hide from the IRS. I mean, you just can't make this up. But sad news, the world eventually caught on. After the whole Panama Papers mess, Switzerland joined the OECD Common Reporting Standard, meaning they now automatically share data with over 100 countries. It was a sad day for tax evasion enthusiasts. For this reason, I'm sad to give it a C tier. But let's move a bit to the west and check out the countries of Ireland and the Netherlands. Ireland has a corporate tax rate of just 12.5%, which is already ridiculously low. In this country, there's a clever trick that the IRS hates, called the double Irish-Dutch sandwich. Step 1. Transfer your IP rights to an Irish company managed in a tax haven. Irish tax laws don't apply. Instead, it's taxed at the rate of the tax haven, which is usually 0%. Step 2. Your actual business operations. They're all run through Irish Company B, which collects all the revenue from customers. However, Irish Company B doesn't get to keep the profits because it licenses the intellectual property from Irish Company A and pays massive royalty fees for using it. These fees are so high that the Irish Company B's profits are basically wiped out. Step 3. Enter the Dutch company. Irish Company B doesn't pay royalties directly to Irish Company A. Instead, it routes them through a Dutch subsidiary, as the EU has treaties that eliminate withholding taxes on payments between EU countries. Without this step, Ireland might tax the money leaving Irish Company B, but by routing it through the Netherlands, you can avoid that tax entirely. Now finally, the Dutch company sends the money to Irish Company A. The profits sit there tax-free. It's this smart trick that had been employed by major US companies like Apple and Google. But sadly, the EU has been cracking down on this, and it no longer works. So this one's only a B tier. Luxembourg. They are so good at hiding money. It makes Switzerland look like an amateur. Luxembourg offers private rulings to companies, which are basically secret tax deals. Think of it as the VIP section of tax evasion. From a recent LuxLeaks scandal, journalists uncovered how Luxembourg helped companies like IKEA, Pepsi, and FedEx avoid billions in taxes. Even then, Luxembourg prosecutors sued the crap out of the whistleblowers. It just shows their great dedication to this whole tax evasion thing. A tier. Now, let's move a bit further away to Asia. Hong Kong, a place where the skyline is as sharp as its tax laws are blunt. What makes Hong Kong so special, you might ask? Well, for starters, it has no capital gains tax. You can flip stocks, properties, and even NFTs without paying a dime to the government. Corporate tax caps out at a whopping 16.5%. Compare that to what Uncle Sam charges and you'll feel like you're practically stealing. If your company operates outside Hong Kong, the government charges you a big fat zero on your profits. Here's how it works. You set up a business in Hong Kong, and as long as you pretend most of your profits are coming from foreign trade, you're golden.
I'm in Resolute. I'm in an airplane bathroom. I am in an unpowered glider.
Sell consulting services to your own offshore company in the Cayman Islands and you're done already. Hong Kong's vibe is a mix of Wall Street greed and high efficiency. It is a financial playground with fancy offices, crowded apartments that cost 40 years of annual salary, and more money laundering than a laundromat during happy hour. Hong Kong gets an A tier. The only reason it's not S tier, a certain government tightening its grip. But hey, as long as the money flows, honestly, who's complaining? Singapore. Welcome to Singapore, the golden child of Asian tax havens. If Apple were a country, it'd be Singapore. Clean, efficient, and suspiciously rich. Singapore's secret sauce? A corporate tax rate capped at 17%, with generous exemptions for startups and foreign income that's not brought into the country. Singapore is a major hub for trusts and foundations. Translation: rich people parking their money in super secret funds so that nobody, not even their current spouses, can find it. Swiss banks might have the reputation, but Singaporean banks are out here quietly raking in billions from the world's elite. Yeah, sure, Singapore might seem like a dystopian utopia. Everything is spotless, the trains run on time, and chewing gum is banned. But hey, at least you can avoid taxes, which is what you asked for, right? For its sheer efficiency and creativity, Singapore earns a well-deserved A tier. If you're gonna evade taxes, hey, you might as well do it in a clean bubblegum-free country. But that's pretty much it. I hope this list gives you a good starting point if you'd like to commit a federal crime in a, fictional GTA world. Subscribe if it helps out.